Welcome to the Dealmakers podcast. The Dealmakers is a platform for leaders in the commercial real estate industry to share their personal stories, business insights, and industry secrets because we believe in spotlighting the real people behind the deals. This podcast is brought to you by Agora, a comprehensive real estate investment management platform offering a wide range of services to enable real growth and provide the best real estate investment experience both for GPs and LPs. I'm Asaf Raz. Let's go. So with us today, we have Matt Whitemore. Matt is an outdoor hospitality professional, campground operator, and investor based in Syracuse, New York. And without further ado, Matt, please take it away. Tell us about yourself so our audience gets to know you.
Yeah, appreciate the time to be here. Excited to jump into this conversation. So I'm Matt Whitermore. As you said, I live in Syracuse, New York. I am now an operator of 7 campground properties. Got into that business 3 years ago. Before that, I worked in different areas of commercial real estate investments and finance. Did multifamily acquisitions for a few years and then jumped into commercial mortgages and debt and equity placement on all different types of commercial real estate. So it's been a fun journey, fun winding journey, I'll call it.
And we met at the gala, right? I think I saw you at the gala as well, at the Real Estate X gala.
Yeah, it was a lot of fun. What an incredible experience that was.
Yeah, there's another one coming up very soon, so be prepared.
Yeah, looking forward to that.
Yeah. Okay, take it away. Sorry for that.
No. Yeah, so the last 3 years, my life has been 24/7 basically in outdoor hospitality. Started off with a small campground in a hot little hospitality town called Livingston Manor in New York, in the Catskills, just a little over 2 hours northwest of Manhattan. Had no idea what I was doing when I got into it, but stumbled across a special property, wild country on a famous fly fishing creek, black bears and bald eagles and beavers and just beautiful, beautiful scenery. Knew there was potential, saw some potential in implementing some higher end, unique lodging options in some of the campsites. So we're doing that. It's been 3 years since that acquisition. Lots of cool stuff happening there. Over the next couple of years, bought 2 more campgrounds, then teamed up with Roll Campgrounds. The founder there is Gerard Ramos, and we shared a very similar vision with these really interesting, cool, natural environments in these campgrounds. So now we're up to 7 campgrounds, and we're actually, we're working on our pitch deck, updating our pitch deck. We've got a couple big investor meetings. So hopefully we're going to be raising a bunch of money and buying a bunch of campgrounds in the near future.
So Matt, how does that work, Matt? Okay, so I've talked to a lot of developers, real estate entrepreneurs, that did, multi or single homes and then went from single to multi or from multi to single or, from multi to industrial or mixed use. Or, I've seen a lot of movement in this and shifts in this market. I've never seen anything like what you did. How does that happen? Like, how do you shift from, cities or like multis to campgrounds and like nature and, like A-frame cabins, like we talked about before the episode? Like, how does that shift happen?
Really good question, and it all sort of happened by accident in some ways. So I started with small apartment buildings in 2019. I just believed that in terms of prospecting and building a pipeline and financing, availability of funds and pitching investors and all that, small multifamily was just the easiest way to get started. So I did that. I got up to 35 apartments, small apartment buildings all around Albany, New York, which is where I was living at the time. I always knew that was going to be a stepping stone to something else. I just didn't really know what. I liked the mobile home park space. I had financed a few mobile home parks and just really fell in love with the whole land lease model and the tenant-owned homes and just the efficiencies of that investment model. So I started prospecting mobile home parks, and a small percentage of my database was miscategorized, and they're actually seasonal campgrounds. I was prospecting across the Northeast. So lo and behold, some owners got back to me and said, Matt, not a mobile home park. This is a seasonal campground. But if you'd ever be interested in buying something like that, come see us. So late 2019, early 2020, started driving all over upstate New York and New England, touring campgrounds, meeting really awesome owners, getting a look at the books, and just getting a crash course in that business, and fell in love with it. I've always enjoyed the outdoors and nature and hiking and being in beautiful places. So it just really clicked for me that this could be a really rewarding way to build a career and build a portfolio that's not just about the numbers. You know, what I immediately kind of hit me with my time in multifamily was, yeah, I enjoyed, providing a good, safe, clean place for people to live. That's obviously a very important thing. I don't want to downplay that, but I just didn't find it like intellectually interesting or rewarding. It was just, working in spreadsheets and trying to make the spreadsheets happen in real life. Whereas there's just so much creativity, and, you buy a rustic old campground and it's kind of a blank canvas that you can just put your own spin on and put your fingerprints on and go any number of different directions with your business model.
Yeah, it's so clean and clear. I remember we talked about this before the episode, but I was looking at a few properties at upstate New York because I was so interested in what people are doing, and you've seen people building really unique like campgrounds and like mobile, like some sort of like, it looks like mobile homes, that are kind of spread around the property. And they're so like they feel so remote, but they're so close. It's like, it's maybe an hour and a half to get to the Catskills, 2 hours tops, and you get to like the most remote areas, beautiful locations in upstate New York. So that's like, I can really appreciate the shift that you've done and, how connected you are to that. But the question that arises first is, how do investors feel about that? When you raise money for something like that, like how do you reel them in? What makes them interested? What makes them feel safe with such a sort of an investment?
Really interesting question. And it's such a new kind of niche.
Yeah.
And there's all sorts of buzz around outdoor hospitality, especially with the pandemic.
Yeah.
There was just insane demand in 2020 and 2021 that the industry was on fire, and it's normalizing now. But, just seeing the news headlines for a lot of these investors and maybe even prospective operators, there's so many new people coming into the industry, either as, passive investors, LPs, or aspiring operators. So it's an interesting landscape. I do think that people are severely underestimating the operational headaches of running a campground.
Yeah.
It's the closest asset class in like core real estate that you could compare it to is a hotel. But there's also, there's things that make it, in my opinion, a little bit more difficult than operating a hotel. There's also some things that make it easier. It's an outdoor hotel, but there's just operational aspects that I think people don't realize they're going to get into, or they underestimate.
Yeah.
All that being said, if done right, there is incredible opportunity for high cap rate investments, high yield on cost, really creative things to drive revenue, to just, really, really compelling numbers.
Yeah.
But I always caught, go ahead.
I feel like it's also, the difference is, and again, not trying to talk down at multi. Like I love multi. I love this, like you said, like giving people a place to live. But I feel like you have to be so creative when building a portfolio like that. Like there's so much creativity that goes into this, so that people will actually come. They don't live there. They won't come for a long time. It's a trip, they travel through the location. Like, how do you reel them in? And I feel like it has more of a marketing, creative perspective than any other asset class. Correct me if I'm mistaken.
I think you nailed it. And it's an interesting dynamic where it's really mostly exclusively mom and pop owned properties.
Yeah.
Most of the properties that we look at to purchase have been owned by the same family for 20, 30, 40 plus years. And usually you don't see mom and pops marketing very well.
Yeah.
But that's because they haven't really had to. They have a very low basis in the property. They don't have to charge high prices. They can charge well under the market price and still make a great living. So they're not motivated to push rates. They get very long-term customers that, whether it's a seasonal park or an annual rental, people will stay for decades. We have seasonal campers that have been on our properties for 20, 30 plus years.
Wow.
It's an interesting thing in the Northeast where the parks cater to full season renters.
Yeah.
And it becomes their second home, their seasonal vacation home, where they build a deck around the camper and like a canopy, and that's their weekend getaway. And they winterize the camper in that site and leave it there for years, decades even, and they just come back year after year. So,
and if you want to see how it looks like, go to Matt's LinkedIn page, and you'll see it on literally the top banner of your LinkedIn page is that RV with the deck and the canopy and the bench. Looks so nice right on the river.
Yeah.
Wow, it's beautiful, man. So nice. It looks so nice. I really love that.
Yeah, it's a lot of fun.
Yeah. So let's dive a little bit to the numbers, and also we can relate a little bit to the the reduction of interest rate that just happened years ago, which was pretty surprising. Like, people expected it, but was a good number. How does that affect your current operations, your current portfolio, your fundraising right now? Like, how does that take effect in your business?
We expect it to open things up. I mean, we also expect it to, create a frenzy of activity in the market and create some more competition.
Hello.
It's a really interesting market because it is it's so much work to run a campground that, I was one of these real estate investors that jumped into it, and my attitude at the outset was, it can't be that much harder to run a campground than a mobile home park or an apartment building, and I was dead wrong. I was fortunate that I grew to really love it and see the future potential, so I could adjust my expectations and, recalibrate and figure out, okay, what's my adjusted path here on how to build a big portfolio, for the rest of my life doing this. So I consider myself lucky in that respect, but most people are trying to buy at like a 10% cap rate. What makes that difficult these days is how I noted earlier, that there's a lot of buzz around the industry. There's a lot of new entrants into the market. Mm-hmm. So supply and demand of investment opportunities is out of whack. And we're, with the rates going down, we're hopefully coming out of a period for commercial real estate in general where transaction volume was down. It's hard to make deals pencil and all that. Campgrounds and outdoor hospitality kind of had an inverse market experience during that time because there was just a constant influx of new buyers.
Yeah.
And there's a limited supply of these opportunities, especially if you follow kind of the common investment philosophy for these things, where you need a certain level of revenue, you need a certain number of sites. Like there's two big REITs in the space. There's Equity Lifestyle Properties and there's Sun Communities. their average park is, 150 plus sites, maybe even 200 plus sites, generates a ton of revenue, caters to long-term customers, very predictable revenue. You're seeing a lot of people get into the resort space, which is great. It is a volatile space with the transient revenue, especially if you're catering to the people with the, $500,000 campers that, they're big diesel guzzlers. And we saw it when gas prices went crazy that travel went down because it was going to cost you $1,000 in gas just to, get to your destination. So it's a super interesting space. I always say that each campground, each RV park has a entirely unique business model. We have different types of parks. There's snowbird parks down south that, fill up with retirees in the winter. There's workforce housing parks that people call man camps that are down the street from, a power plant or a big construction project that see huge occupancy for a multi-year project. And then there's a ton of risk. If that project goes away, there might not be demand. There's seasonal family campgrounds like in the Northeast that cater to those seasonal campers and families. There's the high-end beach, town resort RV parks that are top of the market price-wise, but are super well located. So, people are paying very low cap rates for those types of deals because they believe the demand will be there forever, which is probably true. But, people come in and they're like, oh, tell me how to buy an RV park. Tell me what metrics I should be looking in to buy an RV park. And I'm like, I don't even know. Like,
it's a lot.
It's right. It's tell me what you're looking at. What's your time horizon? What's your risk appetite? What excites you about?
How do you underwrite it? That's, I think, the most exciting question, because it's all connected. I feel like the underwriting and actually like raising, I'm not talking about LP capital. I'm actually talking about the debt side of things.
Okay.
Like, these two things can be, at least for me, they're feeling a little bit like a challenge. How do you solve that friction with lenders and also in the underwriting process of those properties? How do you think about that?
It's a really good question. So we have a few different sources that we like for debt. We have a really great life insurance company that we've done a few deals with. That coming into this space, I never would have ever thought a life insurance company would lend on a rustic old campground. Because I came from that world, and I worked for a correspondent lender in the life insurance company space, and we did trophy office buildings and grocery anchored shopping centers and Class A apartments and like really like core real estate. But go figure, that's one of our favorites. The SBA program is pretty popular for transient parks. You with seasonal parks and long-term stays, you will run into trouble with the SBA program because they don't like stays over 30 days. So less than 50% of your gross revenue has to be from stays. Excuse me. Less than 50% of your gross revenue has to be from stays of 30 days or greater.
Or greater. Okay.
Yes. So they look at that like it's not a hospitality business. If it's all long-term stays, they look at it like affordable housing or something. I think it's kind of a closed-minded view of it, but that's just their regulations. You can get USDA financing, which is really interesting if it's qualified as a rural property. Seller financing is a very popular way to execute these deals. Honestly, I think the way to be most competitive in the market is to be an all cash buyer. We've had success where there was a deal that was listed for a long time, sizable deal. It was listed at $6 million, and every buyer was asking for seller financing with really, really competitive terms. And we came in and we didn't need that. So we were a cash buyer, no financing contingency. We got a 20%, discount to the asking price, which made it really compelling. But yeah, I mean, it's tough. It'll open things up with the way the interest rates are moving here. The SBA program will get more attractive. Local and regional bank programs will get more attractive. For most of your campground deals, you're probably looking at local bank as your most probable option, or the SBA. And so you're probably looking at 65 to 70% LTV. Maybe you can get 75. Usually a little bit higher of an interest rate than you'd get on regular commercial real estate.
Mm-hmm.
Maybe 1 or 2% higher. Local banks are always kind of, they create their own programs. They you call one bank and their interest rate's 8%, and you call the bank down the street and the interest rate's 6.5%, and like there's no reason why.
Yeah.
I mean, I think it takes a long-term outlook in this space. It's just so much, to buy a park and learn the park and figure out the different levers you can pull.
Yeah.
Maybe there's a lot of people in this industry that are smarter than I am, but I feel like, due diligence is period of 30 or 60 or 90 days is not enough time to completely learn all the different pieces and dynamics of the park and how you're going to be able to drive revenue. I think it takes probably 2 seasons to really learn that. So when we look at new acquisitions, we look at like a 3, even if it's pretty well stabilized, we look at really kind of like a 3-year period where we're just getting our feet underneath us, learning everything we can about the customer base and the park and the market, if it's a new market, and figuring out which levers we want to pull, if we want to expand it, if we want to, and sometimes we reduce the number of sites and find that as a way to drive revenue, because we can create a better experience with sites that are farther apart and charge a premium. We've actually executed that business plan in a few different ways and had really interesting results with driving revenue. And then with fewer sites, you also have a more efficient operation with lower operating expenses. So you have a double whammy on your on increasing your NOI there. So it's a really fascinating. I always caution people to not think of it as real estate, honestly.
Yeah. It's more like experience, vacation rentals. Like it's a little bit different. Yeah, it's a little bit different.
Very much hospitality. Yeah,
the hospitality space, 100%. Okay, Matt, we have to keep our promise to keep the episodes between 15 to 20 minutes as our audience asks for it. So we're going to go right into the last stage of the last phase of this episode, which we always do. It's called the Shameless Plug. That's where you shamelessly plug in whatever you're doing today, what you're looking for. And we've had connections happen behind the scenes here where people talked about their business, what they're doing, what they're looking for. And then we have everything in the bio. So people reached out to them and they were doing business together, which is amazing. So this is your opportunity. As shamelessly as you can, please. This is your time.
Absolutely. Yeah, I appreciate that. So Roll Campgrounds, we're setting out to build a world-class outdoor hospitality brand in a large portfolio of campgrounds. There's any number of ways to get involved: partners, investors. If you're looking for a career in the space, we're planning to have huge growth in the near future. So we're going to be hiring and figuring out new capital relationships, making tons of acquisitions, trying to find other people in the space to partner with. We feel like we're really sharp on the operations side. So yeah, I mean, there's 100 different ways to collaborate. We're very where we approach competition as, we view every potential competitor as a potential partner as well. There's tons of business to do and tons of opportunities. So we're always talking to people that are active in the market and trying to figure out a way to work together. So DMs are open on Twitter, email, text, call. I'm available for conversations and just a short message or call away.
So thank you so much, Matt, for sharing your valuable insights and experience with us today. It was really enlightening to hear your perspective on the real estate industry and most specifically on the connection between real estate and hospitality in your case. To our listeners, thank you so much for tuning in to this episode of the Dealmakers podcast. If you enjoyed this episode, be sure to subscribe so you never miss out on the latest conversations with industry leaders. If you have any suggestions for future guests or topics, or if you'd like to be a guest yourself, please reach out to us via the Agora website or social media. Stay tuned for more exciting episodes as we continue to explore the stories behind the deals and the people making them happen. I'm Asaf Raz, and we'll see you on the next episode of the Dealmakers podcast. Thank you so much, Matt.